Hi, and welcome back to my channel. It's been a wild week in the stock market, but that's just because there's a ton going on. We'll get into all of that and what the potential implications of the election are. This video is obviously being filmed before the election, and I'm still working to get caught up, but I have an interesting article talking about basically what the election could do to the stock market one way or the other. So we can see I'm down about $60 on the day, which is a marginal amount. Over the past week, down 3%. On the month, pretty much flatlined. 3 months, still up 12%. Over the past year, up 28.64%, and all-time now up 28.25%, or $2,627.22. Very happy with that. Total investment in my portfolio is now $9,300, as we can see down here. That means I deposited another $150 into my account last week. With that new deposit, I made a couple of purchases. First, I bought one share of O, or Realty Income, at $60.76. Next, I purchased 2 more shares of SPHD, my S&P 500 ETF. Those shares were $34.45 a piece. Total cost was $68.89. And last but certainly not least, I purchased $40 worth of Bitcoin, or 0.00309 Bitcoin. My new position there is 0.258. My price was $12,927, which is very high considering where Bitcoin's been the past few months, but we'll get into that at the end of the video. Bitcoin has spiked recently. But now we'll get into what analysts believe the S&P 500 will do in the near future. Here we have a short article from Market Insider titled "The S&P 500 will tumble up to 20% for the inauguration as investors have lost hope that COVID-19 will be controlled," and Investment Cheap says. The S&P 500 will tumble, as I said, 20%. We see stocks falling by another 10 to 20% from there. It says the stock market is telling us that COVID-19 isn't going away anytime soon. Expect COVID-19 would be under control by now. Expectations that it would be under control by now have vanished, and we've seen the stocks falling 10 to 20% from here. We believe that if the S&P 500 breaks below 3,200 before the election, its next move may be down another 12% to 2890. The Investment Chief's trading strategy led him to profit from the market's volatility at the height of the crash. He has been long volatility since then and told investors it's the only asset class with any clear upside potential at the moment. Even after today's 20% spike, we believe that volatility has more room to run between now and the election. We see volatility rising even further after the election, the longer we go without a clear result. He added that work-from-home stocks like Zoom and DocuSign are solid long-term investments, though the markets are currently displaying extremely bearish signals for stocks. So the big news here is that regardless of what happens in the stock market, these analysts believe, or rather, what happens in the election, the stock market should crash, according to these analysts. And it has more to do with the pandemic than it does the election. But what they're saying is there's very high volatility, and either way, the election is going to increase that volatility, perhaps even more so than in the past if we don't have a clear winner. That means it could be a great time to buy, it could be a horrible time to buy, but as I've mentioned many times, my portfolio is geared for the long term, so I'm going to continue purchasing. Now we'll get into my stocks. Please don't forget to like the video, subscribe to the channel, and comment down below what you think. It makes a huge difference in terms of the algorithm and making sure other people can see this video. First stock we have here today is SPHD, as I mentioned before, my S&P 500 high dividend, low volatility ETF. This one has struggled recently. The dividend, of course, is really strong here, but if we look down here at the total return now down about $121 or 11%. So if we zoom out to the month, we can see down about 2%, and it was even up approximately 5%, so it's down significantly since then. Over the past 3 months, still down 3%. Over the past year, down 24%, and 5 years now, down 3%. The way I look at this is that this is a solid pick, and most analysts would agree that sort of these low volatility ETFs are not going to perform great right now, and they may not perform great in the future, but they're going to perform good enough. That's a good building block in my portfolio, and my 30 shares I have right now makes up 8% of my portfolio. I would expect that to rise in the near future. Next up, we have Coca-Cola trading at $47.80. That is down from the past couple weeks. So if we zoom out to the last week, we can see it's down about 6%. Coca-Cola made an announcement that they are going to be partaking in global layoffs at the corporate level, which is not a huge deal long term, but it says that they're struggling more than people had previously thought. So if we go down here, buy rating is still strong, and the earnings actually look pretty strong at 55 cents a share. But again, the larger concern with Coca-Cola is these layoffs and the fact that the global soft drink market is declining and shrinking. So over the past month, down about 3%, 3 months up 1%, over the past year down 11%, and 5 years now up only 12%. That being said, extremely strong dividend here. I think if we look at the dividend yield, it's only showing about 3.3%, but it's a little bit higher than that in actuality. And of course, Coca-Cola is going to be increasing their dividends. They have each of the past 55 years, and that's something that we can continue to depend on. Here we have Penn National Gaming, which is an interesting stock because of its meteoric rise back during the summer and its fall off rate here. But if we go down to their earnings, we can see that from this latest earnings call, their earnings were awesome. This is because casinos opened back up, the fact that the hotels were able to open, albeit not at full capacity, but of course the Barstool Sportsbook app has really taken the market by storm. The last time I checked, they had approximately 6% of the market share in Pennsylvania. And the articles that I've read said that that is pretty much unheard of in this space to gain that sort of market share in the first month. So if we zoom out to the past month, as I mentioned, down 25%. Over the past 3 months, still up about 55%. Over the past year, up 150%. And at the 5-year clip, up 216.8%. This is a stock I'm going to continue to hammer. I'm going to buy this as much as possible because I believe in Barstool Sports. I think, as I've mentioned many times, that the sports gambling industry will continue to perform very strong. Next up, we have another stock that's been struggling lately. Total return here on AT&T is down about $57 or 19%. I'm in this one for the dividend, and I'm here for the long term. 59% hold rating here on Robinhood. If we zoom out to the past month, down about 6.5%. 3 months, down 10%. Over the past year, down 30%, and 5 years now, down about 21%. If we zoom out to their earnings, we can see that they're continuing to fall right alongside where experts had those estimates at. But the problem is that they're trending in the wrong direction. And certainly with T-Mobile now controlling a much larger portion of the market, there is some worry there. But as I've mentioned in previous videos, there's really only 3 carriers left in the United States now, being AT&T, Verizon, and now T-Mobile, now that they've merged with Sprint. So I'm going to continue to purchase. If nothing else, I will hold. This is not a stock I'm going to be selling. Next up is the newest holding in my portfolio, which is Apple. They have struggled mightily over the past week, down about $11 or about 9%. So if we go out to the last week, it's showing only about 5%, but I made that purchase last Friday and they have struggled since then. Down about 5% on the month, over the past 3 months up 18%, on the year up 81% still, and 5 years up 274%. This had less to do with earnings. As we can see, they were very on par with those estimates, even slightly ahead of that, but concerns about who is going to be buying this new line of iPhones. They do have a lower end model there, but they are still extremely expensive. And with everything going on in the pandemic, experts don't believe that the consumers are going to be willing to pay $1,000 or even $800 for a new smartphone with very few upgrades. But definitely one to consider watching. It's something I'll keep track of in the future. Let me know what you think about Apple. Last but not least, of course, we have Bitcoin trading at $13,427 right now. As I mentioned, Bitcoin has exploded over the past week. Total returns now up $952. Bitcoin makes up 29% of my portfolio, and my average cost is still sitting at $97.40. Very happy to see that it's still under that $10,000 mark. And as I mentioned before, my new quantity is 0.258 Bitcoin. So over the past week, it is up 4%. Over the past month, up 24%. 3 months up 21%, over the past year up 42%, and 5 years now up 4,607%. I say it in every video, I'm going to continue hammering Bitcoin until the end of next year. All the estimates I've seen are anywhere from 50,000 all the way up to 400,000. My best estimate from what I've seen is around 120,000. The price at the end of next year doesn't matter. The important thing is the fact that Bitcoin has a ton of room to move upward. A lot of experts have talked about the fact that people are going to continue using Bitcoin more so than they have. They refer to that as market adoption. I think that's a very good reason to be interested in Bitcoin, and it's one of the reasons that I'm going to continue to hold it. As always, thank you for watching to the end of the video. I'll be back with another one next week. Thanks.